Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis. Sometimes it could come from the economic calendar, a combination of that, or with headline news or geopolitical. But sometimes it gets really even more confusing out there when the market sentiment changes, where good news is now bad news, and vice versa. We try to get into the give you an explanation as to why the markets are doing what they're doing, and hopefully give you the information you're seeking to make a good decision for yourself if you're looking to refinance or purchase, and just sitting here watching videos to learn a little bit more what's going on with mortgage rates. Or if you're in the industry, hopefully this just gives you the news that you're looking for to keep up to date with what's going on here. So a little bit about myself is I am a loan officer. I do work with national lenders, so we do lend in all 50 states. If I can be of any assistance with your purchase or your refinancing, so I'd love to earn your business, so please reach out. But more than that, we'd like to be a resource here for you folks. So if you guys got questions about anything, please feel free to reach out. So without further ado, we'll jump right into our report. We'll start off with the economic calendar. Here's a report I kind of just casually look at. It's brought to you by the MBA, Mortgage Bankers Association. It talks about mortgage loan activity reports, so it kind of lets us know from one week to the next week if there are originated more loans for that week. So as we can see here, we saw an improvement on the refi as well as the purchase side. So it did pick up as timely as that we did have loans or a slight dip in the rates there. But we also got kind of get more into, I don't really get into import-export prices, but as you can see here, import prices did rise a little bit. And of course, that could be inflationary data. Export prices, of course, going out even higher. But more importantly, here we got the retail sales here, and for the month of May. And April was revised slightly lower from 0.9% increase to 0.7%. Forecast has come for 0.2% increase, and actually we had a pullback. It contracted by 0.3%. Now, we also got the New York Fed, or Empire State Index. This is manufacturing in the New York region. So previous month, back in May, it dropped 11.6, so it contracted. It was supposed to go up by 3. It actually contracted again by 1.2% in the month of June here. Now, we also got the NAHB housing market index. This is also basically the home builders index. This gives us an idea as to what the confidence level for home builders are. And as you can see here, we had a 69, which was pretty low. Forecast was supposed to dip a little bit further to 68, and it dipped down to 67. So, of course, home builders are a bit more concerned. The concern, of course, nowadays is the big spike in interest rates, and that could squeeze a bit more home buyers and make it more difficult for them to sell the property, especially when they've been, trying to build these properties. Let's see here. We got business inventories. I saw it was revised back for the month of April, but March looked like had a slight increase from 2% to 2.4%. Forecast was kind of for 1.2%, and it came in basically as expected. Now, the big one for today, we got the Fomc finished up the meeting. I kind of kept this video more for afterwards to give us an idea as to what the Fed was going to do, and they did come with a surprise. I was calling for a 50 basis point because they typically been pretty good about not trying to surprise the markets, and basically he did come in with the 75 basis points, and basically said it could still be left on the table. We could see it again. This is the biggest hike that we've seen since 1994, so it's a big deal. They did raise their Fed funds outlook for by end of this month, or by end of the year, excuse me, from 1.9%. And the normalization is anywhere between a normal rate, it should be between 2 and 2.5%, all the way up to 3.4%. And then next year, they figured maybe a couple more hikes could bump it up to 3.8%. So they are looking to go not only towards normalization, but they're looking at going what they call the neutral level. They're looking at going far above that to try to stave off inflation and bring it down hopefully very quickly here. Now, one of the things that disrupted them, we'll touch on that later, excuse me. I was going to mention something that kind of also drew headlines today, but we'll finish up what we're talking about the mortgage bank, the Fed announcement. So again, the dot plot basically shows that we're going to have quite a bit more spikes here ahead. So right now we'll be at 1.75%. So we got plenty more hikes to go to bring this up to like the 3.4% range by end of this year. So we could easily see a few more 75 basis point hikes before we're finished here by end of year here. Now, he did say they're going to continue with the balance sheet reduction. So that's something that's hasn't been taken off the table. They're going to continue along with that. And if the markets reacted positively, we were. I'll show you once we get to mortgage-backed securities. But before that, we had some volatility too. We had the ECB did a surprise meeting earlier today, and that kind of caught a lot of investors by surprise. So you're going to see a big seesaw here on the mortgage-backed securities. Stock and bonds are both up today, as you can see here. And here's what it looked like today. So we started up, then we started kind of gradually going downwards. Then we kind of worked our way upwards. The Fed was right around here is when we did the meeting. As you can saw, we did kind of drop a little bit, and then we kind of started rising again. So we're kind of getting the losses we had yesterday, and hopefully we'll get the other ones back as well. So right now we're at 94 basis points, up 94 basis points. Earlier on, we were only up about 40 some basis points before the Fed, and then it kind of shrunk to about 30 basis points, 20 or around 25, 30 basis points. But since Jerome Powell has come on, it's steadily been climbing even further, and now we're up 94, and while we're doing this video, even touched at 100 at one point. Basis points. So what does 100 basis points equate on these more basis points? Equals 1 point in your loan. So that 1 point could easily be about 0.5% in your interest rate. This is why we saw such a big spike over the last several days, going from almost 5.5% last week to in the low 6% range, like 6.28, as you'll see a little later today, or a little later in this video once I show those out to you guys. All right, so what does this mean? We're seeing some improvement in mortgage rates, which is obviously good news. We're seeing good news for those who might be buying and also refinancing. So how much improvement we'll get, and it's hard to say. They were kind of, with the whole CPI thing coming in, since then we've been really kind of tanking. But maybe this might ease the markets a bit more and kind of bring us back closer to the 25-day moving average. We did kind of wander off quite a bit, so hopefully this can bring us much closer and or close that gap a bit here. Treasuries are down a little bit, down to about 3.33% after touching yesterday. Where was it? Up as high as 3.5 actually. So we were up at 3.5 at one point yesterday. All right. So lastly, we'll touch on the mortgage-backed securities. What's the average rate? Showing the 30-year fix is now at 6.22 now, and the 15-year is at 5.38%. So with that in mind, if you guys are looking for rates and stuff like that, we do have some great arms that could offset that. We have a 5, 6, and 7, 6 arm. The conforming loan limits. We do have some extra restrictions to it, but we're giving some very good rates on those. Those are, I'm saying, still in the 4% range. I don't want to get into for compliance reasons specific, but if you guys would like it, please feel free to go ahead and reach out to me. I can certainly we can talk a little bit further about those. But a great product line right there. These would be great for cash out refinances, for second homes, primary homes, and such out there. If you guys got any other questions, please feel free to reach out. We're here to help you guys out. If you guys like these videos, please help us out and smash that like button. We greatly appreciate it if you can help us out and like and share. And you guys have a great rest of your day. We'll look forward to see you guys in tomorrow's video. Bye-bye.